Futures are trading in the red as all eyes turn to the Fed's first rate decision later this week. It's expected to be a pause, but more importantly, the indication of where things are headed from here will be watched very closely. Analysts expect, of course, the rates to be unchanged. In other international news, there is a further escalation of tensions in the West Asia region. The US said that Iranian-backed militants killed 3 service members and wounded as many as 25 others in a drone attack near the Syrian border. Meanwhile, US Navy ships fired on a Houthi anti-ship missile in Yemen just hours after a tanker was hit in the most significant attack yet by the rebel group on an oil-carrying vessel. The latest escalation in tensions has pushed prices of oil higher. As of this morning, Brent was trading higher at about $83.5 to the barrel. Of course, what you see on your screen is NYMEX. Now, the top news from India comes from the political arena. In a move that gains significance ahead of the general elections later this year, Nitish Kumar and his party, Janata Dal United, ditched the opposition alliance, resigning as Chief Minister of Bihar, only to join hands with the BJP to once again stake claim to form government in the state. Later on Sunday evening, he was sworn in as Chief Minister for the 9th time, but this time as part of the JDU-BJP alliance. Kumar said that his decision was because the situation with the alliance was not good, in his words, that there was a fight for credit for the government's good work. He said that he was working hard, but others were not working at all. The BJP and the JDU have recently concluded a seat-sharing arrangement for the upcoming Lok Sabha election, and sources have told NDTV that all the Bihar BJP MLAs have already submitted letters expressing their support for Kumar. Now, the big question is, how will markets react? Of course, it's been a topsy-turvy few sessions for the Indian equity markets with a spike in volatility. What are the major F&O cues heading into the new trading week? Remember, we're getting back to action in the markets after a truncated week last week. Agam is here to tell you about the latest cues. Agam, we're starting immediately after the monthly expiry. How does it look today?
Well, this week is going to be not unlike what we've seen last week. At least that's what the guesses are because of the upcoming vote on account. And I know that there won't be any long-term measures are being announced still. Usually the week before, at least 3 to 4 days before the budget, we do see some amount of increased activity. That said, well, at least as far as trade on last Thursday goes, we did see a little bit of a come off for the Nifty, which came up around 0.5%. A good 36% added, but that's also because it was a new series coming through, which is why we're seeing that number tad higher than what we have been used to. As far as the Bank Nifty goes, that's where we once again saw a 0.5% cut in the underlying with an 80% increase in open interest, naturally because of rollovers. But how does the option market look at the moment? Let's pull that up and take a look at where the Nifty stands. Now, in terms of the changes, we saw a lot of writing, around 21,300, 21,400, calls as well as puts. At the moment, I reckon that at least some traders will be keeping an eye on volatility, which is why there may have been buying in options instead of the usual selling, considering the expectation of volatility to still stay around, at least until the day before the budget, which is on Thursday. And that is also the weekly options expiry for the Nifty. Of course, in terms of now open interest distribution, at the moment, it's a 500-point range, where max OI stands with the 21,000 put. And this is I reckon a lot of traders have taken the opportunity to go ahead and sell that particular put since we've seen the Nifty come off to a certain extent. And on the higher end, keeping an eye on 21,500, but not as much open interest in calls as much as there is in puts. So overall, we're keeping an eye on these levels. And of course, the banking indices, Alex, which once again will be in focus given the kind of volatility that we've seen last week.
All right. Thanks so much, Agam, for bringing us those details. Among the stocks that will be in focus on account of earnings, you've got ITC, which is set to report its third quarter numbers. And all eyes are going to be on the cigarette volumes for this particular company and also what it's reporting in its FMCG business. We've got Sesha joining in to put some of those numbers in context for you. Good morning, Sesha. What are the key expectations? I got all my S's mixed up. Sesha, morning. What are the key expectations?
ITC is likely to report a subdued quarter. Revenue is likely to grow in mid-single digit, while EBITDA and profit is likely to grow in low single digits, according to Bloomberg estimates. Margins, however, is expected to see a slight contraction due to the volatility in raw material prices. Now, if we look at the segments, ITC cigarette business, which continues to be the biggest contributor to the overall top line, is expected to see a mid-single digit revenue growth compared to last year. Volume growth, however, is likely to remain flat on a high base. We must remember that the last time it was ahead of the union budget, which was a full budget, so there was a trade build up that happened, but this time it is unlikely because it's going to be an interim budget and the full budget is in mid-year. Now, in fact, if that happens, this would be the third quarter of single-digit volume growth for the cigarette segment after several quarters of double-digit growth. Now, revenue for the FMCG business, except cigarettes, is expected to grow 6 to 7%, driven by pricing. Volume growth for the business is seen in low single digits on the back of weak demand, as we have seen for other companies as well. Margins, however, is expected to expand 102 basis points according to the estimates on the back of easing commodity prices. Now, hotel business is likely to report a stellar show, growing 50% year on year on the back of wedding season. ITC's agri sector is expected to grow on a lower base. The base quarter was impacted on account of the exports ban on wheat. The paper business, however, is likely to see a drop in revenue compared to the year-ago period on the back of persistent weakness in demand and lower prices.
So much, Sesha, for breaking those numbers down for us. Let's talk about Bajaj Finance as well. The third quarter numbers will be out today, and quite a lot to take into account for this particular company, particularly on the back of the regulatory changes that occurred not too long back. We've got Harsh joining in to give you some perspective on what to expect. Harsh, of course, I think we've spoken about in the past, not the entire quarter affected by the change in regulations, but what are the key numbers to watch out for this time?
Well, yes, absolutely, Alex. So let me start off with the net interest income number expected around the 7,600 crore mark. Growth continues and to be quite solid for Bajaj Finance, especially where the AUM growth is concerned. They disclose their operational metrics. I'll come to that. But around a 28% growth year over year, where the net interest income is concerned, you're expecting profit after tax also to expand by roughly 25+% and come in at around the 3,750 odd crore mark. So those are the two kind of broad numbers that we are expecting. Commentary, Alex, around where the NPAs as well as where the credit costs seem to be heading will be a key in an environment where we are seeing unsecured being in focus because of poor credit costs. Now, one clear piece, of course, which stood out even on past con calls, is the way they're calibrating growth in certain segments. That will be a key focus area. Where RWAs is concerned, where capital adequacy essentially lies, Bajaj Finance extremely well capitalized, but what will be the impact on that capital adequacy? Of course, need to wait and watch for that one, but will nonetheless not be of much concern. Where do the cost of funds head and where do margins head will be another key metric, because you are currently at the top of the rate cycle. This is probably where margins ought to bottom, and some commentary around that will also help. So some of these factors in focus with Bajaj Finance's earnings.
Absolutely. Thanks so much, Harsh, for bringing us those details. Like Harsh pointed out, some of those key metrics have already been announced or discussed on account of the quarterly updates, but the capital adequacy, of course, and also the margins, key monitorables for Bajaj Finance. Let's talk about more stocks after a very quick break. We'll be back before you know it. Welcome back. You're watching All You Need to Know. What you see at the bottom of your screen is the latest update from Hong Kong, where China's Evergrande, which is the major property developer in that country, which has been facing issues with debt payments, has gotten an order to wind up. This is something that was feared by investors in several regions, and this is because it lays bare the issues in China's property market. It's, of course, a significant amount of debt, $327 billion of liabilities, and that's going to cause problems not just for the property market, but also for the financial sector in China. As things stand, of course, the Chinese markets are trading in the red, down about 0.2% for the Shanghai index, and the China A50 index, in fact, trading in the green by about 0.5% or so. This is, of course, on the back of a reprieve that was initially received by China Evergrande about 8 weeks back in a long-running lawsuit that had sought the winding up because of problems with payments to creditors. But in that interim, China's Evergrande and, in fact, the policymakers were unable to get any deals with those creditors to push the payments down the road. We'll address that, of course, later in the day, but as things stand, the winding up order from the Hong Kong court has come through. Let's turn attention back to the Indian equity markets and focus on stocks that you should watch out for in trade today. We've got Mihika joining in first to give you some details about a couple of stake sales as well as a joint venture announcement. Mihika?
Yes. So first we have Piramal Enterprises, which is going to sell their entire 20% stake in Shriram Investment Holdings, and the stake will be sold to Shriram Ownership Trust for a consideration of 1,440 crores, and the transaction is expected to be completed by March 31st, and the proceeds will help strengthen the company's balance sheet. Then we have Jubilant Pharmova, where its Singapore subsidiary will sell its 25.8% stake in Sophie Biosciences for a consideration of $139.4 million. Sophie Biosciences will merge with the Trilantic North America by June 30th, and Jubilant Pharmova will receive 113.63 million post the merger and will get 7 million in transaction terminated related fees if the merger transaction does not go through. And lastly, we have Laurus Labs, which has entered into a 49-51 ratios joint holding with KRK Pharma, and the registered capital of the firm is 15 million euros, and the joint venture is set to produce finished products for new markets, including the Indian market.
Thanks so much, Mika, for getting us those details. Mahima is up next with a few stocks, including HDFC Bank. Mahima, what can you tell us?
Right, Alex. So as you rightly mentioned, HDFC Bank is the first stocks to watch. RBI has accorded approval for LIC to acquire 9.99% in HDFC Bank, and this needs to be completed by 24th Jan. At present, LIC is already holding 5.19% in HDFC. Then we have DLF, where DLF is set to purchase bonds of 600 crore face value. The three lenders include Standard Chartered Bank, DB International, and Deutsche Investments India. The negotiated consideration stands at 825 crores. Then we have Adani Power, where MOU to sell 100% of its two wholly owned subsidiary to Adani Connex Private Limited is set, and this needs to be completed by 31st March 24. Then we have two companies which won orders from GUVNL in Khewra, Gujarat. First one is Coal India, which has emerged as the lowest bidder for 300 megawatt solar project in Gujarat. And then we have SJVN, which has also won an auction for 100 megawatt solar project in Khewra, Gujarat, and the tentative cost of this project is approximately 550 crores. So these are the key stocks to watch out for today.
All right, thanks so much, Mahima, for getting us those details. Let's talk about NTPC from the power space. It's set to report its third quarter numbers later today, and we've got Anushi joining in to tell you about the key details to watch out for. Anushi, what can you tell us?
Morning, Alex. So if we are to look at the street expectations, not such a particular exciting quarter for NTPC, wherein the expectation is that the revenues are expected to remain flat at rupees 44,646 crore, wherein its EBITDA might see a beating of about 12.3%, whereas its margins will now fall to about 28.4% compared to the reported 32.5% of the earlier year. Also, the net profit may see some marginal increase of about 1.8%. So these are the key estimates for its key operational metrics. But now what more can we expect is the outlook on the increased capacity and the generation amidst the festive season. So increase on the power demand can be one we can watch out for. Again, the company also commissioned a 50 megawatt of Dayabar wind project. So that can also be another thing that we should be watching out for. Another is the renewable energy capacity, which the company is aiming to scale up from 3.3 megawatt to 60 megawatt. So that is something in the sector which we should be watching out, and the polycon and module prices, which would aid in the RE capacity generation. So NTPC, this is the key metrics that we should be watching.
Sure. Thanks so much, Anushi, for getting us those details. Sticking with earnings and telling you about companies that have reported their numbers over the weekend. We've got Varsha joining in to tell you more about that. Varsha, what are the companies that you've listed out?
Good morning, Alex. So let's start with macrotech developers, where net profit have beaten estimates, and the pre-sales numbers rose to 12% year-on-year, while collection was down 3%. Also, company has added 3 more projects for 2 million square feet area. Then we have Zen Technologies, where you see company has given really strong performance. This is attributed to increased order book, then successful execution of existing projects and expansion into new markets. Also, a company is planning to raise 1,000 crores through QIP to fuel further growth and expansion, and company aims to reach 1,000 crores revenue in FY25. Then we have Vedanta, where if you see, profits have beaten estimates, while the consolidated net profit dropped 7.2% due to higher finance costs. EBITDA growth, which was 20%, was led by aluminium unit, power division, and iron ore unit, while EBITDA for Zinc International fell 80%. Then lastly, we have Shakti Pumps, where we have seen strong numbers attributed to strong order book, which company has secured over the last 6 months. And order book as on December 2023 was 2,250 crores, which is to be executed over the next 21 months.
All right. Thanks so much, Varsha, for getting us those details. A few more stocks to watch out for, among them SBI Cards as well as Tata Technologies and Aeroflex. To tell you about the earnings that these companies have reported, we've got Harsh joining back. Harsh, what can you tell us?
Well, good morning, Alex. You're seeing largely a very weak set, especially when it comes to SBI Cards. 26% growth is probably the only positive in that number. But outside of that, despite that kind of growth, you're seeing a spike in GNPAs as well as NNPAs. Let me pull out the numbers. 21 basis points increase on a sequential basis where the GNPAs are concerned, 8 basis point increase where the NNPAs are concerned. Capital adequacy goes from 20% plus down to 18.5% or less than 18.5%. That's the other concern. And where cost of funds are concerned, they've gone up on a sequential basis by 49 basis points. 7.6% is where the cost of funds have come in at. So definitely a couple of very, very weak numbers in there, Alex. And going forward as well, weak commentary coming through from SBI Cards. But outside of that, you had Tata Technologies, good, strong set of numbers, revenue growth of roughly 1.5% sequential, a bit up 11.3% sequential. The margins have gone up by 140 basis points from 14.82 to 16.2. And you have your net profit, which is up 6.1% sequential, first quarter after listing. So definitely a solid quarter there. Also, the other one, recently listed Aeroflex Industries, revenue was up 11% year over year, but you're seeing EBITDA, which is up nearly 51% year over year. So your margins have gone up from the 13.9% mark to almost 19% on a year-on-year basis, and profit also jumping 76% as a result of that. So that was a solid set as well.
All right. Thanks so much, Harsh, for breaking those numbers down for us. And that brings us to the end of this particular edition of All You Need to Know. But there's lots more coming up over the course of the next one hour or thereabouts to set you up for trade. And that is in India Market Open. Do stay tuned. NDTV Profit is bringing you more coverage over the course of the day.